Benchmark equity indices have hit record highs over the last few sessions. On Wednesday, the Sensex touched 80,481 levels, but eventually the markets ended in the red. The Sensex closed below the 80,000 level. Now, global cues were weak on Wednesday. That drove investor sentiments, but also there was some profit booking that was seen in the backdrop of the highs that markets have seen. Investors are also now closely eyeing the earnings season that kicks off this week with the earnings of Tata Consultancy Services, the IT bellwether, which reports earnings on Thursday. Now, broadly, the IT companies are expected to report moderate earnings in the April-June quarter as well. Now, a major problem for IT companies over the last few quarters has been that discretionary spending has been weak amid global macroeconomic concerns. Also, in markets like the US, which is the largest market for IT companies, there are presidential elections this year, so uncertainty around that will also prevail for some time. What investors and analysts will be closely watching out for this quarter will be the commentary or the outlook from the IT companies on how is the demand and the spending environment looking for the rest of the year. And that will have a bearing on the stock prices of these companies. If you look at the banking sector, well, their problems are very different. On the one hand, their asset quality remains stable, the NPAs remain low, but the deposit growth continues to lag credit growth, and that is where the banks are facing a problem. Now, several banks are trying to aggressively push their network franchise to mobilize deposits, but then again, that has a bearing on their funding costs. So overall, banking sector margins are likely to soften in the current quarter. For automobile companies, there is a mixed trend that is emerging. Two-wheeler companies are seeing strong double-digit volume growth, that is the number of units sold. Passenger vehicles, on the other hand, are seeing only low to mid single-digit volume growth. As such, inventories have been seen piling up at passenger vehicle companies. Their discounts are also rising in this backdrop. So analysts at Emkay Global are saying that the overall picture for passenger vehicle makers seems to be deteriorating. FMCG companies are expected to see some volume recovery, but again, that will only be in the low to mid single digits. One key problem FMCG companies have faced in the last few quarters is the sluggish rural growth. Now, this year, with monsoon expected to be good, the hope is that the rural growth will also pick up. Now, the government is also expected to do something to boost the rural incomes. What it does in that respect will be closely watched in the upcoming union budget. Barring the earnings season, the overall macro environment still remains strong for India. Now, Mirae Asset Mutual Fund has released a report where it says it sees no significant risk to India's long-term growth prospects, which are projected at 6.5% real GDP growth and 10 to 11% nominal GDP growth, and this could double the economy's size in about 7 years. Now, the new government is, as we said earlier, expected to prioritize private consumption, particularly for lower income groups, so that the government can perform well in the upcoming state elections. Now, the government is also expected to continue on its fiscal glide path while also keeping the foot on infra spending as well. Now, how all these things pan out will be clearly visible in the upcoming union budget later this month. Now, the union budget is also something that the markets are closely waiting for. While they are not expecting any significant deviation from the budgets of the past, like we said, if it is a more consumption oriented budget or not is something the markets will be closely eyeing. Now, over the last few quarters, we have seen valuations run up in several sectors. Look at PSUs or public sector undertakings, for instance, where the valuations have shot up sharply. Now, whether these valuations are justified in some of the sectors will be clearly visible from the coming earnings season, and the way the corporate earnings are expected to pan out will clearly determine that. For now, many fund managers, including those at Mirae Asset Management, are preferring large caps in the backdrop of the sharp rally that the markets have had. Now, analysts are generally seeing more comfort in the large caps at this point in time versus their mid and small counterparts.